everybody, welcome back. Let's talk Robinhood. All right, so let's go ahead and jump right into this bad boy. So, for those of you guys that don't necessarily know, I just started the Robinhood Challenge, and for some of you guys that do know, I also have about 400 or so $1,000 in a bunch of different other portfolios, whether it's Cardone Capital, M1 Finance, Fidelity. So I make videos about this stuff all the time. So if you haven't seen any of those, and that seems like it's more interesting to you, go check them out on the channel. I might actually leave something right up here in the upper right hand corner for you to watch. But really, what this video is going to be focusing on is the Robinhood Challenge aspect of things. Now, $300 compared to, say, over $400,000 in a total portfolio doesn't seem like a lot, but I wanted to do something a little bit different in 2020. So I'm doing an M1 Finance Challenge and the Robinhood Challenge, both of which are basically starting at smaller size portfolios. So you can see if you're just potentially starting off relatively new to the stock market, don't necessarily have as much as a portfolio of, say, $400,000, how we can kind of scale this through time and kind of look at it. The hope is, at the moment, I've had this, I guess, since back in 2013, 2014 timeframe. I'll kind of give you a link back in the other video that I just did, but I never really filled it. I kind of just put 30 bucks in and then maybe another 30 bucks. No, actually, I think I just put 30 bucks in and just kind of coasted with it from 2014 to now. And so you can kind of see the graphic here. We kind of put the 30 bucks in, had it in cash for a little bit, had it invested, then it kind of grew. But then more recently is when I added the additional 300 bucks. Or 250 bucks rather, and I will be continuing to add 250 bucks twice a month. So the middle of the month, and as well as towards the end of the month or the first of the month. I don't remember exactly which. So that gives us an opportunity to purchase some stocks. So I did do some analysis. I work in the oil and gas industry, so um, I was looking at potential oil and gas companies that I would want to be buying right now, and I was basically looking at the super majors, whether that's Exxon, BP, Shell, ConocoPhillips, Chevron, Total, if you want to consider all those. And I kind of found the one that I really liked at the moment. Granted, I didn't go through all of them, but I went through a good couple three that I already have positions in and I think I'm more comfortable with investing. So we'll kind of go through one of those, and then we also have a utilities company, which doesn't have a lot of exposure at the moment into the portfolio. And so we'll kind of get into that as well. So for those of you that are unfamiliar with the positions I currently hold in the Robinhood account, it is currently Kinder Morgan, or ticker symbol KMI. That's also an energy company, but it's actually a pipeline company, if that helps a little bit. Give you guys an understanding as to that. Pays about $1 a year in terms of dividends, which is kind of cool. And then you have Teva Pharmaceutical, which actually cut its dividend. And I didn't purchase this one recently. I purchased it quite some time ago. So this one might actually go away. But I think in the long term, it'll probably start paying a dividend again. But to be honest, this is one that I purchased so long ago that, yeah, it's kind of just been hanging around in the portfolio. So that one might leave the portfolio because I don't necessarily trust it, because it's been cutting its dividend, and the company kind of changed considerably since I invested in it a couple of years ago, probably 4 years ago or so. So anyway, getting into the actual aspect of purchasing, currently sitting at about $268 worth of cash. Now, of course, I do have these unsettled funds here, which you kind of see is the 883. So I did have two friends sign up as well. So I did have the actual $250 from me actually putting the money into the account rather. And then I had this 883 from two shares that I got. I got EROS, which I'm not really too familiar with, but it was a technology company. And I also got a share of GoPro. And so not really interested in either of those companies. When I had an opportunity to sell them yesterday when the market opened, I went ahead and did that. So you can see I got them both on the 15th, 16th, so a little bit last week. Luckily from two friends signing up that I've been asking to join for quite some time. They finally actually obliged, so appreciate that for those of you who actually signed up. and actually made some capital gains on these. I mean, not a lot to write home about or anything, but from 380 for EROS to $4.55, which was pretty cool. And then Jeep GoPro went from $4.16 to $4.28. So a little bit of capital gains associated with that. And then obviously I had the deposit here today, technically. What I wanted to do is actually go ahead and buy today. I'm not going to buy anything on margin, so let's kind of get that right out of the way real quick, maybe on a different company. But the first one I kind of wanted to really look at was Royal Dutch Shell B class shares. You guys can kind of look on the price target here. It's kind of been going down with respect to the past year or so. I think this has to do with the oil price kind of being stagnant over a little bit. And comparing to 2018 time frame, the oil price has gone down a little bit as well. But you can see over the 5 year chart, it actually had a drastic dip back here, if I can get it to follow me, back from 2014 down to 2015, where it actually got down into the $30 range. I would have been a huge buyer at that point. In fact, I think I might have bought around this time period in 2016, the $40 to $50 range. And then I think I sold in the low 60s or something like that. I still hold about 60 or so shares, I think, in my individual brokerage account, but I had up to, was it up to 200? But it was definitely double at least. So I had at least over 100 shares. I think it was close to $9,000 worth. So had over 100 shares or so at some point, and eventually trimmed it just based off the fact that I had so much energy positions. My current job is in energy. I have a lot in Exxon. I have a lot in BP. I have a lot in Kinder Morgan. I have a lot in Cheniere Energy Partners. So it just didn't really necessarily make sense for me to be so over diversified or over allocated rather into energy positions. And so I wanted to really take that out and have something a little bit different. You can see now it's come down a little bit, 11% over the past 5 years, 4% within the past year. You can see it kind of jumped up right as soon as we entered into 2019. Past 3 months, it's kind of flat. But yeah, sometime in the past 6 months or so, it's relatively dropped from hovering in the mid to low 60s down about $5 or $6 or so. So, wanted to get a little bit into why I'm purchasing it. So, if we actually were to go to the actual Yahoo Finance page, which I'll do right now, you can see a little bit more actually with a little bit more detail comparatively to say Robinhood. You can get a little bit better of an idea as to how it's dropped. So it was around $63 or so 6 months ago. It actually dropped down to the mid 50s here, and it's kind of been hovering here ever since. And honestly, I've had this kind of on my radar for a little bit, but I actually kind of was actually able to do a little bit more financial analysis with it. I've been talking with my buddy at work, and he's really started to get me hooked on looking more at the cash flow statements. Not that I never was looking at them before, but it's just something I've gotten, I guess, a little bit more comfortable with after having a little bit more conversations. And so actually being able to look at these makes me feel pretty good. So the company itself is worth around 200 and some $billion. I think it's actually 220 or so $billion. So when you think about it, having a net income of anywhere between 10 to $25 billion like you've had over the past couple of years, especially with the volatile oil price, looks pretty good. So this year they're kind of forecasting around $20 billion in terms of revenue, and in 2018, year end 2018, they basically walked away with around 23ish or so in terms of net income. So you think about it, that's, if you were to consider that aspect of things, it is about a price to earnings ratio of about 10, which isn't necessarily bad, especially considering that the oil prices is currently at a relatively cheap price compared to where they were just under 5 years ago, just over 5 years ago, rather, when I entered the oil and gas industry itself. And so that's something to keep in mind. You're getting $5.64 for every $58 or so per share that you're kind of putting out there. And then if you actually look at the cash flow, this is where it gets extremely interesting, because oil and gas companies are extremely capital intensive businesses. So generally speaking, what they try to relate things on are earnings before interest, tax, depreciation aspect of things. And so when you actually evaluate the business, you want to add in the depreciation and amortization back in, because in oil and gas we have something called depletion costs, but I'm not going to necessarily get into that. But what you can see basically is adding in back in your depletion costs here, which is a non-cash item. So basically it's just used to help basically benefit and lower your tax basis throughout the year. You add that bad boy back in, and you think about that, you're ending up with about 35 to 50 billion dollars worth of cash flow coming from operations, which is absolutely amazing considering that the company is only worth 220 billion dollars. You actually have 35 billion dollars worth of cash to go ahead and use on the operations. Keep in mind 2015 isn't a good year to use. 2016, 2015 is a good use because those prices were extremely volatile and very much down into the 30s 40s time frame until they recently started coming up in the 2017 2018 time frame, and more so stabilizing in the 50 to $60 per barrel range. So, and actually looking at the capital expenditures of things, you're looking at investing about 20 to 23 billion dollars a year in that. And then, so when you're actually taking into account how much they're actually using associated with that, compared to their cash flow from operations, you still have a massive amount of free cash coming to the business. So you think about it in terms of how much money this company is actually making back into their coffers after already spending sometimes millions or even billions of dollars, adding it back into as capital to the business, you're still getting about $30 billion to walk away with. Now, what ends up happening is they're paying about $15 billion or so in dividends. And also, they're paying a decent amount in common stock and repurchasing common stock. So that's something to keep in mind as well. So just alone in 2019 aspect of things, they're forecasted to pay about $25 billion in terms of stock repurchases as well as dividends. And just like they did last year, they paid about $20 billion just to purchase in 2018 $5 billion worth of stock and $15 billion worth of dividends. Now, these years were a little bit interesting because I think they eliminated the script dividend, which means they're basically providing out shares instead of actually providing out dividend income via stock on a portion of their positions. So I think if folks wanted to, they were basically volunteered to accept more shares, which I know I generally speaking do, instead of actually receiving cash. But now they're kind of back into getting to the point where they are now distributing both shares and cash again. So that's why these dividends paid's kind of gone up a little bit. So anyway, really interesting aspect of actually looking at Shell. So let's get back actually into Robinhood and purchase 2 shares or so. All right, so let's actually go ahead and get into actually investing in this company. So if you look at Shell here, it comes up automatically about $58 or so and 46 cents. Let's go ahead and buy 2 shares of that. So we'll go ahead and hit buy number of shares. Let's purchase two. I don't necessarily like market orders because you never know, the price can really spike up. But I'm comfortable paying about $59 a share, to be 100% honest with you. I think it's a good enough value where we're going to be making our money back. If you think about it, companies making anywhere between 50 or so billion dollars in terms of earnings before interest and taxes. And so that being said, once you actually look at the free cash flow aspect of things, you're walking away with 30 to 35 billion dollars off a 200 billion dollar company. I mean, if you just do that math really quick, I mean, you're looking at somewhere, in the high single digits with respect to price to free cash flow. That's kind of what you want. I mean, if you were to think about just the amount of free cash that this bad boy is producing, you're going to be able to get your money back within 9, 10 months if you were to kind of just have no capital expenditures in the business. Now, there is risk associated with that because it is a volatile business and it's a cyclical business, being that it's oil and gas. However, I'm a firm believer that the price of oil and gas probably won't dip too much. I think we've stabilized. I think we might be in the 60s here for a little bit in terms of oil price, but I think we're just a small crises away or a quick, really rapid growth cycle away from that price doubling very easily. And you've kind of seen that over the past couple years or so, and it's even gone up. I think it even touched in the $80 per barrel mark relatively recently within the past 2 years. So, not too much tips the scale in any certain direction, but it's definitely an interesting time in the energy aspect of things with renewables extremely blowing up with respect to their growth rate. So, the other company I wanted to do is really look at Southern Company. I know this is a company that's run up a drastic amount over the past 2 years or so, but Regardless, I think it's a good enough company for me to purchase. I wish I'd purchased it when it was, I guess, 50% cheaper, because you can see it's gained about 30 or so percent over the past 5 years, and even just 45% over the past year or so. So I wish I purchased it a little bit sooner. But utilities, generally speaking, aren't my forte. I don't have a lot of utilities. It's less than a half a percent in terms of value in the portfolio, even less if you look at it in terms of dividend income. So it's just not really been something that I wanted to do. And I would love to do an additional financial analysis on Southern Company. But honestly, this video has gone a little bit too long at this point, and I got to edit it down a little bit as well. So hopefully this just suffices that I just purchased the two shares that I want in Southern Company here. And yeah, so let's just see what we can do. Let's just add, oh yeah, whoops, two shares. And we'll stick at a limit order as well. We'll stick at the 68.30. To be honest with you, I don't think it's going to be too crazy in terms of what we're going to be paying in price here. Hopefully, when the market opens, it's nothing too extravagant. We're not jumping up too high, too low. But we'll see. I'll probably just make sure that it works out. Worst case, 5 p.m. tomorrow, it doesn't work out. Hopefully, I have enough cash in the account, and it looks like I do. So yeah, there we go. We have two purchases kind of pending at the moment. We have RDSB and Southern Company here. Hopefully, we'll be adding those two shares to the actual portfolio tracker as well. You'll be seeing that, and I wish I had a little bit more time. I would do that right in front of you guys, but I actually haven't set up the Robinhood aspect to the portfolio tracker in completeness yet. So I have it actually set up in the overall portfolio tab, but not in the overview tab. It takes just a few minutes, but I really wanted to catch JMac Dividend Investing's video, so I'll be editing this video while I'm preparing for that. Also, if you haven't checked out Independent Investor, or Captain Ryan as I like to call him, he did a phenomenal live stream last Friday. And I mean, I was sitting there just hanging out, playing some video games while that's another story. I won't talk about video games too much, which is probably why I'm a little late on some of these videos. But I was just listening to him, man, and he did a phenomenal job really just breaking it down. He normally does hour and a half live streams. I think he went over 2.5 hours, and this guy's doing a full-time job. He's got kids, he's doing his own stock portfolio, he's doing his wife's stock portfolio, he's doing these live streams, and he's doing these videos on top of everything. I have real, and working out, keeping his health up. I mean, that's something I can't say for myself. So he's been chugging, man, and I'm real inspired by how he's doing so well. And he made a quick comment saying he should have over 100,000 subscribers. I completely agree. I think he's one of the better individuals here on YouTube giving out his advice. And if you don't listen to his advice, send it to a friend, send it to your family. Maybe they'll be into it. Maybe you're just not necessarily too much into investing. Maybe you're just kind of in it for a little bit of hobby here and there. But this guy he's world class. Make sure you check his videos out. He goes live every Friday, Saturday. I think he might be switching or contemplating switching to Saturdays to have a little bit more free time with his family on Fridays. But yeah, check his channel out. I'll probably leave a link in the description as well. Why not? He's a cool enough guy. And really hope you guys like this video. It's a little bit different. Of course, some of this stuff might get trimmed down a little bit, but this was actually a little bit fun. Took me a little bit to set up, but I think I actually found something that works out a little bit cooler, and maybe it's something that I do with my Fundrise videos and my M1 Finance videos as well. I mean, why not? They're all applications. And to be 100% honest, I could also do this with Fidelity, because I have a Fidelity app on my phone as well. So we'll see. Get myself a little bit in front of the camera a little bit more. I think that this actual camera view actually isn't too bad. Hope is when I move back to the States a little bit later this year. I think if I end up going back to the States, which is potentially the current plan, not 100% sure yet, I'll be sure to get additional lighting and some good quality cameras. Not that I couldn't buy one in Trinidad, but I'm not going to pay the extra couple $100s to get a decent camera here in Trinidad when I can just wait a month or two and save a couple $100. So really hope this video finds you great. Hope it finds you well. I'm going to trim this bad boy down and tune into Jason from JMac Dividend Investing, and I'll catch you guys on the next video. Cheers.